The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, a wild ride on the day Friday with the USDA quarterly grain stocks and acreage numbers showing their surprises, which is typical for the June reports. At the end of the month, the end of the quarter, we are going to dig through all of these numbers, talk about the surprises, have a little bit of debate about it, and try to find some answers here. Hopefully, joining us here today on the program, pleased to have with us our good friend DuWayne Bosse with Bolt Marketing. DuWayne, good to have you on the show, my friend, and hopefully you're like me, ready for a weekend and ready for the 4th of July after those Friday reports. Wow, I'm almost speechless in it, and it takes a lot for me to be speechless, DuWayne.
you and me both, and I'm sure we have plenty to talk about. But yeah, what a crazy day. And let's go back to when it came out, right? So typical. We're all trying to get on USDA's website and see the report and the numbers, right?
Mm-hmm.
And part of them are there, but the acreage numbers are blocked or they're not refreshing, and my website's just loading. So then when I finally see USDA tweets out that the acreage numbers will be on this site, not this site, I'm like, what? And then when you see the numbers and you see soybeans down at 83.5 million, I kind of wanted to trade it and get out of hedges and buy soybeans, but I also was like, is that the real number or not? And I think there's a lot of other brokers that felt the same way. So for the first 20 minutes, we're all just kind of sitting here watching the algos trade it and soybeans sharply higher. And no one knew what to trust, but that's the shocker, right? Is that the soybean acres down about 4 million. So big deal there, but a lot of numbers to talk about. And you never see corn and soybeans go opposite directions, but they're going to try their hardest here over today and maybe even some next week as well.
Well, I want to start with those acreage numbers. Obviously, as you said, that was the biggest surprise. And I dive through the numbers. I look, Twitter, a few of the different folks that you and I both follow there between, Karen Braun from Thomson Reuters and other folks, and just trying to make sense of this acreage. And I asked you this before we jumped on the air. I'm going, what happened? Where did these acres go? Why such a big surprise? I think about, I saw a graphic, North Dakota dropping almost 1 million acres of soybeans. There's just these little things as you dive into the report, you wonder what happened, DuWayne. Yeah. What's your best guess on what happened here?
I think it's actually all right that I live where I am. I think I can understand it a little bit, believe it or not. So our office is right on the North Dakota, South Dakota border, and we farm as well. All right. A ton of snow. I was thinking, man, prevent plant might be higher year over year, and everyone else in USDA was counting on it being sharply lower, right? Because we needed all those acres. Jesse, it got down to the last little bit, really after the late plant date, which is May 25th for most of North Dakota and myself. It was that last week in May when we planted the corn here, and the weather just opened up, it flipped, it got warm enough, and that's what happened in North Dakota. They had a lot of prevent plant last year. That ground was prepped. It was ready. And then a lot of snow on it. And we waited. Man, if we had rain for 7 more days, this would be a totally different conversation right now. But it didn't. What North Dakota did is they planted corn on those prevent plant acres. And actually, they planted little spring wheat as well. That acres came in more than anticipated. And what got lost in the whole thing? Soybeans. They just didn't want to plant the beans. So surprising. So like I said, moving forward, we'll always look at that last week in May and watch the weather in North Dakota and parts of South Dakota to see if we can get those acres in always. And that's what happened. So yeah, acres are gone, but I always thought the principal crop acres were a little too high anyway. So don't be shocked with that.
Well, that's great points there. And it puts it into perspective for us here a little bit. And I throw in there the the grain stocks numbers on the soybean side as well, coming in a little below the pre-report expectations. And I think if you just take all of that as a whole here in soybeans, man, oh man, we don't have any room for error when you look at how tight that carry out is now, DuWayne.
Right. That's exactly what we'll all kind of do now when the market's closed here and the dust settles a little bit, is we're all going to go to our spreadsheets and plug in these acres and what do you plug in for a yield now? And that's the first thing I did. And of course, we start yelling back and forth between the brokers in this office of like, how tight are soybeans? And, with the current demand numbers, it's around 150 million bushels for a new crop penny stock or lower. And then you start thinking, well, man, June's been dry. Do you lower the yield? I don't know if you lower the yield for soybeans yet. So yeah, it's unbelievably tight. But on the flip side of that is the demand side, right? And demand for soybeans have been horrible for new crop exports. We're way behind pace. What's one thing that's going to make that even worse? Higher prices, of course.
Mm-hmm.
So, we're going to rally up to make sure we have a crop, because it might be a crazy tight situation. But if new crop export demand continues in the tank because Brazil's got this record crop they're selling to China, well, then it might not matter. So that's what we've got to sort out the next couple of months, Jesse, and then watch that yield close. Because you're right, say we yield under 50 bushels an acre nationwide, soybean gets we can't export any soybeans next year.
Yeah.
So, man, we're going to have a lot to talk about over the next couple months.
Well, and here's some other numbers that pop out at me as well, as I'm just diving through this more. On-farm stocks for soybeans down 3% from a year ago. Off-farm stocks down 26% from a year ago. I think that just adds more to this bullish fire in this soy complex that we're kind of stoking here a little bit, DuWayne. But just seeing numbers like that, well, boy, to your points, that just makes me a little nervous about how many soybeans are out there in the pipeline and in the field right now.
Well, right, USDA is pretty open about admitting that finding out the off location or the on-farm stocks is their most difficult job.
Yeah.
What are farmers actually holding? So if that's the percentage breakdown, is that really out there, Jesse? Maybe the old crop soybean situation is even tighter. And now we knew this last winter. This is why we were bullish in our office and thought we'd have a spring rally, because the old crop stocks are so tight. And the market traded that way, Jesse. I mean, we traded at higher prices. What happened is you mix our higher prices with Brazil's big crop. Guess what they did? They expanded acres, right? As much as they could 1 year over year. That's what high prices do. And now they've got this big crop. We lowered our demand. So now they're selling it. But we still have this old crop situation that's very tight. So you're going to see bull spreading going on. You're going to see some goofy trade. 2023 is going down in history for an unbelievable marketing year. And we're not to July 4th yet, Jesse. There's going to be a lot more gray hairs the next time we come on, I think.
Well, and I don't want to say this, but I'm going to say it anyway. And I'll probably put my foot in my mouth here in a couple of weeks. But I feel like with how bullish this report was, soybeans, has it blown the top off this soybean market, do we think? Do we think there's a lot of room to the upside here, or will this probably level off as we get into the 4th of July, DuWayne?
I think it actually levels off, Jesse. We're talking soybeans in a bubble. And in a bubble by itself, it should trade between 1350 and 1450, maybe even take out the old highs if we get a weather scare. It doesn't trade in a bubble. And what I mean by that is we're going to watch the corn price. And as bullish you and I are talking soybeans, the corn was horrible today, other than the tighter than expected stocks. But that's not a problem when you're not going to ship any of it. So the increase in corn acres is going to drag the corn market down. And I'm worried over the weekend, Jesse, here, we're going to have rain in Illinois like we're having today. I think we come back next week and we still trade weather and we assume a trend line soybean yield. We assume we're okay. And I don't think new crop beans can get above that $14 mark. I think 13.50 and higher is still a place to probably hedge them. But maybe with put options, you might want to keep your upside open because it is going to be explosive.
And real quick, too, in the soy complex, before we talk corn, because I want to talk corn, meal and bean oil, very strong on the day. So definitely finding support from those products as well here, DuWayne.
Yeah, absolutely. Especially the oil market there. Palm oil prices have been higher as well. There's still this talk of, the jet fuel and demand coming down the road. And we thought we were planting more soybean acres this year because we all knew that was coming. And then we found out we didn't plant those acres. So rightfully so on the soybean oil market rallying, but we don't export that market either. So I think I have more questions than answers today. And I think you bring me on to give you answers, but we'll do our best anyway.
And hey, one other point in soybeans, China bought beans for new crop on Friday morning.
Yeah.
And that was rumored in the trade for the last couple of days, I believe, DuWayne.
It was talked about a little bit, and really nice to see. Maybe it's a deal where, we got low enough recently that they just said, well, no matter what the crop size is, because remember, China didn't know this report either. This is probably a hedge themselves. They said, let's buy a little bit of beans before that report, just in case the acres are down. Well, imagine that. They played it better than I did once again.
That is for sure. And we'll have to see what happens moving forward in the soy complex. We are talking today with DuWayne Bosse of Bolt Marketing. DuWayne, let's talk corn. And looking at the corn numbers, the grain stocks came in below expectations, but that acreage number, of course, higher. Third highest corn planting since 1944, the most since 2013. Obviously, we saw that reaction, a little bit of that delayed reaction, as you mentioned, in the corn market until we got the acreage numbers out. But sub $5 D's corn as we wrap up on Friday, $4.94 3/4 at the close on the board. And, opposite story here for this corn trade. It just feels like that report doesn't help out this corn market much at all, DuWayne.
No, I'm trying to even think of what to say about the corn market, but that's nothing but bearish for me. We can fight the acres if you want, but I wouldn't recommend that. Like our friend Arlen Suderman mentioned, these are the numbers that we will trade, and he's 100% right on that. No, the acres are there. I think what happened is, the prevent plant from last year in North Dakota, that went to corn acres. It went to a little bit of spring. The land was prepped. It was ready. And like I told you, we had just a little bit, an open window at the last week in May, and it was just enough with 60 and 90-foot planters. They got it planted in a heck of a hurry. And everyone else had a great spring. And when farmers have a great open spring and it's warm, we have a horrible tendency, not a horrible, but a tendency to plant that extra 80, that extra quarter of corn because they didn't want to switch to beans or something, which the funny thing is nowadays, you don't think that happens anymore because everyone's planting beans the same time as corn. But this year, you're going to have to say a nice warm spring, and we tend to plant more corn acres. It's just the way it is. Now, of course, with the corn belt, widening up to my area, I suppose that's a bigger deal because we can just get those corn acres in. So crazy market.
Crazy market. Well, and something else too that I found interesting. You look at the harvested acreage number, 86.3 million acres. That's higher than last year. Karen Braun from Thomson Reuters on Twitter, she posted this tidbit. She said 86.322 harvested corn acre number with a yield of 181.5. That's 15.67 billion bushels. That'd be a record, which is above the original estimate. Now, it would take with the new acres just a 176.8 yield to get to that same production number.
Oh.
I mean, so that again, just that adds to the bearishness here, I think, of this corn market when you dive in and look at some of those calculations like that, DuWayne.
My calculations I threw in my spreadsheets. Yeah, the 94.1 million acres, like I said, I will throw that in whether I argue it or not. And I don't really. I think that's right. Okay, just same numbers Karen's using basically straight across. The only difference I have is export demand. I've got lower. I've got down, wait for it, 300, 400 million bushels off of USDA. So I take more acres, 178 for a yield. I don't 175, do whatever you want. I'm still looking at a 2.6 to 2.9 billion bushel ending stock. And that screams you just saw $5 for the last time. If other people trade it that way, now the funds can do whatever they want, but the path of least resistance is going to be lower. And the point I'd like to get across to listeners today is that you're not too late to sell corn. Maybe you don't like profitability, whatever, but the market doesn't care if I'm profitable on my farm. Trust me. Buy puts, sell the cash, do whatever. I think I think the corn market's job moving forward, Jesse, is to go low enough to find export demand. This week in Brazil, in their largest producing state of Mato Grosso, the government there is buying corn domestically from their farmers at $2.80 a bushel. I'm not saying we got to go to 280, but my point is being driven here that we have to go lower to find export demand. Otherwise, this ending stock swells is what I'm trying to say. So it's we can talk about the drought in Illinois. We can talk about a derecho taking some production off the top. But if demand isn't any better, and we just added acres, so who cares about a derecho now? It's just bearish all the way around. I feel horrible. It's a lot more fun when I'm bullish. It really is.
No, I agree. Well, and to your point, whether it's, finding some hedges, selling cash, whatever, there's many different risk management tools. I think of D's 23, D's 24 corn, pretty much virtually the same price at Friday's close, that 495 area on the board. Even look out to 25, maybe, depending on what your strategy is here. But it just feels like that this is that traditional swing point here between the June report and then July 4th, and et cetera, that
Yes.
I'm with you. If you haven't managed some risk, it seems like now's the time to manage some risk in this corn market, DuWayne.
Absolutely. Like I said, I know you look at a chart, you feel like you can't do it now, but remember it was about a month ago we were at this price and then had the big spike on the drought concern, right? So it's still not a horrible price. And go back and look at your continuous charts over the weekend and see where corn was before the great bull run of 2020 started. I don't know. I don't want to put scary numbers out there, but all I know is we have to go lower. We have to go lower to find demand. So no, I'm with you. Like I said, it's not a whole lot of fun for sure, but can soybeans pull it up some? That's going to be the debate maybe over the weekend and talk between brokers and maybe, but corn by itself, if that traded in a bubble, you're probably going to see a 3-something cash this fall. It wouldn't shock me with a negative basis.
A lot of things to consider in corn. On the wheat side, felt like the wheat numbers came in fairly neutral, DuWayne, at least that all wheat planted acreage number, 49.6 million acres. I kind of dove through the numbers a little bit. Maybe you saw something there, bullish or bearish, but to me, it just felt very neutral.
It was pretty neutral. A little surprised the spring wheat acres were as high as it was. It was so late getting planted in North Dakota. I think you'll be able to take the yield off just a little bit. But we also have had rain the last 2 weeks up here that a lot of guys are telling me save the wheat crop as well. So look for spring wheat to see more pressure moving forward, I'd say. The only other side of that is Canada's been a little dry, but it's still with more acres are such a big deal. And we learned that again today. You can take a little bit of yield off in Canada because we planted 500,000 more acres than we thought. So that's the only thing I really saw in the wheat market was a little bit higher spring wheat acres. Other than that, it's going to follow corn.
And it'll be interesting to see, too, with Kansas wheat harvest going on, that hard red crop. I've heard estimates all over the board as far as yield down there. So I think as we get more of that harvest complete here the next week or two, will that impact this market at all, mainly the KC market? I think that's another caveat to this whole wheat discussion as well we need to pay attention to, DuWayne.
Yeah, and it's really tough because I'm hearing the same thing. I'm hearing some Kansas producers saying it's not even worth taking a combine out there. But then on the other side, in Illinois, I've got guys saying I've never seen a wheat crop like this before. Now, 2 different classes, right? But still, Chicago wheat tends to trade all of them mixed together anyway. And it's just, we're not going to run out of wheat. That's the problem. And with Russia, it looks like they're going to export more at lower prices again. I see the path of least resistance lower for wheat as well.
DuWayne Bosse of Bolt Marketing is our guest here today on the show. And DuWayne, we appreciate you being with us. Before we let you go, I got to at least talk the livestock market too. We haven't even touched on cattle and hogs yet, talking all this grain stuff with the USDA reports. But feeders, again, shooting higher with corn breaking sharply lower. Right. Live cattle followed suit. Really strong end of the week in that cattle trade, DuWayne.
Absolutely. And yeah, that's good. Let's end on talking about cattle. At least then people won't be calling me or running up here with pitchforks and torches or anything. How high can cash feeders go? The farmer feeder is going to be back with a vengeance this fall because they haven't sold corn for as cheap as they're going to this fall in a long time. And they're not going to want to do that. They're going to say, well, here's another way I can make money. I can buy calves and I'm going to walk my corn off the farm. So to answer my own question, I really can't. Higher to sharply higher. You know, when you think about inflation, it was 2014 when feeders made those new highs. You know, the old high was 174. And I remember it very vividly because at 175, I had producers like, well, hedge, we're at new highs. How wrong can we be? Well, never say that out loud because the market ran to 240 to show me how wrong I can be. So yeah, more people not wanting to call me now because of how good I am. But we're at 240 now, Jesse, and 250. Can we go to 300? If it keeps raining in the Western Plains, maybe. But let me say this, as bullish as I am feeders, you know, how far can the cash market go on the live cattle side? How high can cutouts go until people just say, I'm not paying that for a steak? That's where I think we get limited. So the cash feeders probably go crazy, but I'm going to be pushing guys still, and I'll do it tonight. I'm going to be buying some LRP insurance, which I hate to be like a salesman when I come on here for you, but it's just risk management is what we're really here to talk about.
Yeah.
And so, you know, LRP is a glorified put option. You buy it and you hope it goes higher. That's what I'm suggesting in the feeder market, Jesse, is do something to protect your capital investment. And if it goes to 300, great. You're happy. Hopefully you buy insurance and it's a waste of money, just like you buy a put option, hope it's a waste of money. I'm bullish. I think it can go sharply higher. But, you know, look at corn. Everyone right now is looking back on why didn't I sell for profits? So think of that in the feeders too.
Well, and here with feeders and corn, locking in some feed needs, I have to think that's got to be back on the radar for some folks if they haven't done so already here, DuWayne.
It probably is, but it's almost like the reverse of farmers not selling when the market goes up every day. Geez, I did nothing yesterday and now it's up 15 cents. I think those guys locking in feed costs are going to not do anything, and they're going to be right day in and day out. So I don't think you're going to see that buying pressure come into the corn market anytime soon, even though maybe they should, but I tell them to wait and see and go hand to mouth as well. So yeah, they probably won't be doing that anytime soon.
Yeah. Hogs too. And I know hogs were okay on Friday. That quarterly hogs and pigs report Thursday, maybe slightly bearish in the short term, but I look at those farrowing intentions the next couple quarters down 4%. To me, that's fairly bullish. So I think we just maybe saw a little unwinding of the spreads on Friday to wrap up the week, DuWayne.
I think you did there, Jesse. Yeah, a little disappointed in that hog and pig report myself. Thought you'd see more sow liquidation from earlier in the summer that we were talking about was happening. Didn't really see that, but like you said, maybe that's kind of hidden in those numbers, in the lower farrowing numbers down further. So there probably was that sow liquidation. Maybe that's how they put the number. Not to mention the whole prop, you know, the 12 with California. We don't understand, is that what gave us the big pop here recently? People actually buying the product before it happens? Yeah. What happens afterwards? It's a market I have more questions than the answers for. Again, Jesus, I've said that like 8 times already this interview. So it's a confusing day even for brokers, if that helps any producers out there.
Well, before we let you go, great thoughts and analysis as always. If folks want to reach out, have a conversation with you, I know they can do it with a phone call or check you out online. How can they get a hold of you, DuWayne?
Yeah, it's fun to talk about all these options and different things that could happen this year. So they can call us here directly, 605-448-2365, or they can check us out online at boltmarketingllc.com.
DuWayne Bosse with Bolt Marketing. Appreciate the time here as we wrapped up the week in the volatile USDA report day. As always, thanks for being with us. Have an awesome 4th of July. We will talk to you again soon.
Thanks, Jesse.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.